Hey guys, it's a market update. In this video, I'm going to look at Bitcoin performance over the rest of this cycle because rate cuts are starting in the States and what happens after that. There's a lot of information online about rate cuts being bearish, but let's just have a look at the data and see how that plays out. So for Bitcoin right now, still in this trend, we're not moving out of this until after the election, in my opinion, or at least when the election results are a little bit more certain. And so the market can actually price in what they think will happen over the next 4 years because the economic plans of both parties are insanely different, right? Bitcoin, look, it's just in this trend, downtrend, consolidation, profit taking. Uncertainty means people don't want to take positions. That's it. And we're going to be in that for a few more months, in my opinion, unless something crazy happens, right? And obviously that can break us out of this range. If you do trade, check out Bybit, link below, up to $30,000 as a deposit bonus. If you're new on there, just click the link and find out the details. We'll look at how rate cuts affect markets then, but firstly, some on-chain data. Mid-cycle, everything just shows this. So supply overhangs, this is what Checkmate calls the shopsolidation of 2024. Very similar on-chain data to the previous cycle before the really big high. Profit taking, yes. Why? When prices get bid up, if someone wants to buy BTC, they have to bid up the price and get it off you. And the more they bid it up, the more people are incentivized to sell. And that comes out as realized profit in green because you have longer term investors eventually being incentivized to actually sell. Why do people bid the price up? They think essentially that the fiat currency that we're valuing Bitcoin against is going to debase against it. There's only two ways Bitcoin goes up in value, right? The fiat currency that you're valuing it in goes down in value because it gets debased, or there are flows into BTC from that fiat currency that push its price up relative to that fiat currency, right? Bitcoin doesn't have any value as such, doesn't go up or down. It's what you value it against that goes up or down, and its relative strength versus that. So really these cycles are people's opinions on, not Bitcoin going up, but the things that we value against it going down. And I want to talk about that later in this video as well. So cycle bottom to cycle top, black line here, which is this current cycle, mid-cycle. This is not really the Bitcoin cycle as much as it is the macroeconomic cycle as well. The central banks are starting to cut. That's why Bitcoin has been pricing this in. A big consolidation mid-cycle, but actually we're in line more or less with other cycles. So I don't really see any difference here. This is the actual signal though. Bitcoin 4-year CAGR, compound annual growth rate, 50%. That's the signal. It outperforms every other large scale asset, and 50% every year for 4 years. If you just allocate 4 years, 8 years, 12 years or more, this still has a ton of actual fundamental growth and is pricing in currency debasement from whichever currency that you want to value in. That's the signal, 50% a year, best performing large scale asset. I see a lot of FUD online about rate cuts being bearish because of course when the central bank cuts rates, what are they actually saying? They're saying that there's a growth slowdown, right? Or a sluggish economy. Well, we have to separate the economy and the financial system, which aren't really the same. So I personally believe that the real economy, the free market, is actually mostly disinflationary, right? We every single day go to work to try and produce more for less. We want to input less and we want to get more out. Why would that be inflationary for prices? Competition and invention drives the cost of things down, which I would say is actually disinflationary. So when you're looking at GDP, which is supposed to be positive, how does that play? Well, you go ahead to the other side of it, which is the financial system, which is a debt-based, leveraged-based system, which requires price inflation and positive GDP to make the previous debt that was taken out appear cheaper in today's terms. If that didn't happen, debt would actually get more expensive as the price level of everything fell. That debt would get more expensive and harder to pay off. That cannot happen, right? That would create a huge crash and the financial system would collapse. So this is why central banks get so scared when they see disinflationary pressures, the free market doing that, is because they don't want a financial crash. So the economy and the financial system aren't the same thing. In any case, let's have a look at how risk assets perform when the central bank thinks it needs to spark inflation again. Remember, they have been fighting inflation, but now they're cutting rates. Well, that means that they want inflation, right? The central bank, they tell us they want inflation anyway. 2% they say it is, but it's actually more than that, right, under the surface. So they want inflation. They need inflation because the financial system is leveraged and it requires that inflation. So they're going to do that. So it's really important to know what you own and why you own it, right? it's not really investing in anything. You're just getting out of that fiat currency into things that actually can protect you against that. That is the actual trade, I think, of our generation, certainly with Bitcoin. Stocks have outperformed bonds, which have outperformed cash when the Fed is starting cutting rates on average. So there's two outliers here, which is recent history, 2000 and 2007. Abysmal, huge financial crises, right? Really not good. And if that happens again, Bitcoin's going to get trashed for a few years. But what happened after those? Absolutely insane amounts of stimulus. So know what you own and why you own it. If that happens again, you're going to have to take some pain short term. Bitcoin's going to crash, stock market's going to crash. But we know what comes out of it, which is stimulus. And we all go to new all-time highs again. But I just want to highlight this. On average, stocks outperform bonds, outperform cash. Bitcoin outperforms all of those, has done, and will continue to do, I believe. S&P 500 returns 12 months after the first rate cut, most of the time positive. Again, two outliers here in 01 and 07. Huge worldwide financial crisis, right? But most of the time, we can see that risk assets actually do decently 12 months after the first cut, if there isn't some absolutely huge financial, apocalypse. However, what happened after these? More stimulus, right? So what do we think is going to happen if that happens again? Fed rate cutting cycles tend to lead to above average returns. Again, we can see that here. So there are scenarios where 12 months after the first cut, it's a disaster. But they're the outliers. Most of the data show that most of the time, risk assets perform pretty well after the first rate cut. Again, know what you own and why you own it, right? You can't invest and trade for a recession. They come around a huge financial crisis. They actually come around very rarely. And even when they do come around, usually after that, risk assets perform well again. Why? Currency debasement. When crises happen, currency debasement happens. Know what you own and why you own it. Talking about what we own and why we own it, why BTC? BTC is just a neutral currency that you can measure value from. And you can't do that in US dollars or pounds or euros or anything else because, well, firstly, they aren't money and they aren't assets. They're a liability of someone else. Fiat currency is someone else's liability, is credit. You can't measure real value from that, right? So let's have a look at this and why all of the way that we even think about measuring value is just kind of backward. And I think Bitcoin will become the actual the yardstick, the measuring stick that all value eventually is valued against because it's actually reliable. So US debt up 65 billion today to a record 35 trillion. Not just the US, it's many other countries, but the US obviously is kind of the main economy that most of the world relies on and prices off. Fiscal deficit in the States is absolutely insane. Huge fiscal deficit. Some of the highest fiscal deficits we've ever seen. The US government is smashing, credit. They're taking credit. They're creating bonds and treasuries, smashing it into the economy to keep GDP higher. They need prices to remain high and not go down, right? So that's the difference between the economy, the free market potentially disinflating prices, and then the financial system, which absolutely requires inflation to remain somewhat solvent. It's not actually solvent. They're just kicking the can down the road because you can't pay this stuff off. So you need that inflation. So the fiscal deficit or the central bank side, they will make sure that inflation stays high. Unemployment ticking a little bit higher. If you look back, every time unemployment has ticked higher, that creates huge fiscal spend. Well, we're on a very, very high fiscal spend already, and unemployment ticks a bit higher. This potentially is going to go to insane levels. The debt is completely unpayable, but we know that already. It's not supposed to be paid off. This is government debt of the United States. To suggest that this chart will somehow change course or change direction, I mean, just play the odds, right? The debt is going at stratospheric. It's not slowing down. It's not coming down. You can't pay it off. It won't get paid off. The only thing you can do is try to stop the rate at which it goes up by creating inflation, creating debt, dropping interest rates, trying to pay off previous debt. But to suggest that the dollar will continue to get stronger or not debase, right, is obviously absurd looking at this data. This is the money supply in the States, M2, right? So this is United States M2, $21 trillion of M2, which is money supply in banks, but the debt is 35 trillion. So you can't pay it off because there's just not enough currency to actually pay off the debt, which sounds insane, right? Where's the cash to come from? So this is US CPI, again, doesn't go down. So this is inflation, again, doesn't go down. So why would you bet against this? So money supply and debt and inflation, it's all just going up to the stratosphere. And that means that house prices and other assets all go up, 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 valued in this currency. Well, yeah, so you're debasing the currency. You're seeing more and more and more and more money supply coming in, right? And so prices go up. But are prices going up, or is just more money coming into the system? And so you have to reprice the actual assets because you've just got more and more and more of these fiat currencies flying around. So the average sales price up, that means housing up, CPI, inflation up, currency up, debt up, house price index up over time. This is gold, which goes up. None of this is going up. It's the fiat currency that is pouring in, and you have to reprice these actual assets in the fiat currency. This is the Venezuelan stock market, which is up like 20x in the last 5 years. So why aren't we all invested in this? It's because this is valued in the Bolivar, which is garbage. This is the US dollar versus Venezuelan Bolivar. I'm going to invert the scale to show you what the Bolivar has done versus the dollar over those 5 years, right? It's travesty. It's an absolute travesty. That's why the stock market going up in Venezuela isn't making anyone any real money, because in the world market, you have to pay in dollars. And these stocks are only going up in Bolivar and not in dollars. So the denominator is important. This is Bitcoin. This is the S&P and gold valued in Bitcoin, right? So the S&P and gold have done really well, and they've gone up, up, up in dollar terms. But versus the actual yardstick, which I believe is BTC, they're down, 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 right? So it really matters what the yardstick is that you're using and what you're measuring your value against, because valuing it against fiat currency is definitely not the right way. Now, the one downside of Bitcoin is its volatility, but I would also suggest that during the pandemic, when the currency was debased by 50 to 60% and we got rampant price inflation, I would say that's volatile too. And that's obviously poverty being inflicted upon people as the things that they need to buy to survive get very, very expensive. Well, Bitcoin's been volatile during that time too, but it's at an all-time high, and most other things valued against it are lower after that time. So volatility exists. You can't escape it. The dollar and other fiat currencies are not safe havens. They will debase and things will get more expensive versus them. So you have to price things in a real hard, desirable currency, either the S&P or gold or Bitcoin or the NASDAQ. Everyone's got their own thing. All of those can work. Fiat currency definitely doesn't. If you do trade, check out Bybit, 30,000 deposit bonus down in the description below. I'm James, this is Money DG. Cheers for watching, and I'll see you in the next one.